Finserv, RR Parkon.
Welcome back. You're still with us on Markets Today, where, as promised, let's go through the remainder of the headlines that we're tracking to you, which brings us to the fourth headline for the day. It was a muted showing coming in from L&T, with the company's net profits, margins and EBITDA missing street estimates. Vivek is standing by to run us through a quick analysis on those numbers. Vivek?
Well, that's right. So, it's been a bit of a mixed quarter from L&T this time around. While the order inflow as well as the management commentary has been quite strong, it's been a miss on the margins due to rising raw material prices. And that is something that, could weigh down as far as L&T's, this particular Q3 announcement is concerned. Looking at the numbers, revenues are largely in line with our poll, coming in close to 46,390 crore mark, largely in line with our estimates, like I mentioned. However, the EBITDA has come in at a little over 5,070 crore, which has missed our estimate of close to 5,385 crore. Margins have dipped on a sequential basis, a 60 basis points dip, and profits too have missed our estimates marginally, coming in close to 2,550 crore mark. Now, what the management has said is that, margins have come under pressure on the back of continuing cost pressures. And another thing to keep an eye out for is the fact that PAT this time around included a one-time gain of 97 crores on back of the divestment of the mutual fund business. However, when you're talking about the management commentary, it's quite robust. They've actually shrugged off any recession concerns. They believe Indian economy will continue to do well, and they believe private capex will pick up, especially in the segments that they're present in, especially in the industrial segment. Overall, a mixed quarter with margins to miss. This is something that the street will look forward to quite closely.
Okay, all right. Thanks a lot for that, Vivek. Well, moving to another big name, Tech Mahindra. They reported their third quarter numbers, which are largely better than what the street was working with. The profit number came in at around 1,300 crores, which was on target. The dollar revenue came in at around $1.6 billion. That's marginally better than what we were estimating, while the dollar revenue growth was a little under 2% on a sequential basis. The margins came at around 12%, which was better than our poll, which projected margins of around 11.8% odd. But let's stick with big earnings for the day. Bajaj Finance and Bajaj Finserv, both of them reported their performance for the quarter. Abhishek Kothari is standing by to give us a quick analysis on both of them. Abhishek?
Well, Bajaj Finance reported an inline set of numbers with our polls. To begin with, the new loans were at 78.5 lakh, up about 16% on a sequential basis. The AUM mix shows that there is slowdown in the mortgage business. However, consumer, SME and commercial business have driven the growth this time around. So calculation shows that the net interest margin might have improved on a sequential basis, but it has declined on a YOY basis. The asset quality that remains benign. Gross NPA ratio has declined by 3 basis point quarter on quarter, and restructured book also remains very good at just 0.08% of the total loans. So return ratios remain healthy. Both the ROA and ROE have improved YOY and quarter on quarter. In terms of PNL, the NII is a beat on our poll. However, the PAT is largely in line with our poll. Coming on to Bajaj Finserv, the insurance subsidiaries PATs have disappointed. So to begin with, general insurance, their profitability is down about 8.6% YOY and about 17.3% sequentially. The life insurance business that saw a PAT decline of 8% YOY and more than 49% sequentially. So in the life insurance business, the premium growth was strong quarter on quarter at about 8.5%. However, renewal premium was the highlight given the fact that it grew by more than 30% YOY and around 15.5% sequentially. In the general insurance, the premium grew by about 29% YOY. However, it declined by 20.1% quarter on quarter. The net earned premium declined by 2% quarter on quarter. That was a resultant over there. So general insurance saw an increase in the combined ratio, which is the operating efficiency, which declined on a YOY as well as sequential basis. Back to you.
All right. Thanks for that, Abhishek. Well, moving on to the fifth headline today, Kajaria Ceramics and cigarette maker Godfrey Phillips India, both of them have reported their numbers for the past quarter. Manglam is standing by to run us through a quick analysis on both those two numbers. Manglam.
But Kajaria Ceramics was under pressure in today's trading session, and that was largely on account of weakness in numbers. Just take a look at the numbers. I mean, a 2% jump in their overall revenues meant that the demand was measly on account of extended rains in October, at the same time the festive season. The company said that it recovered in November and December, but the street, would like to see some more recovery going ahead as well. 2% jump in their revenues was on the back of mostly price increases. The volumes dipped by about 1%, and higher prices of fuel and power meant that we saw a compression of almost 500 basis points on their margins, and as a result of which the net profit fell by 41%. On the other hand, for Godfrey Phillips, the revenues grew about 30-odd%. The net profit grew by 50+%. The reason why the net profits actually outperformed was because of a high other income component that the company reported, and that's because of gain on the sale of their chewing tobacco business. So 35 crores in terms of additional other income was recognized this time around. For them, the growth in their company was led by the tobacco and others division, whereas there was a widening of losses in their retail business. That's talked to in focus. The important trigger, however, for Godfrey Phillips will be what takes place in the budget in terms of an announcement coming in from the tobacco tax front.
Got that, Mangalam. Thanks for that. Well, moving on to notable pharma earnings of the day. Laurus Labs, where it had an initial pop, but it cooled off from the day's high on the back of a miss on the margins front. Ekta standing by to run us through a quick analysis. Ekta?
Well, yes, for Laurus Labs, it was largely an inline set of numbers. Revenue was up around 50-odd%. Street was anticipating around a 47% growth. Profit of around 200-odd crores. Street was anticipating around 185 crores. So both these parameters were better or slightly better than expectations. Remember, numbers were also supported by a low base. But operationally, maybe there was a tad miss. So the margins came in at around 26.1%. Street was anticipating around 28%, and the margins were the lowest that we've seen since Q4 of FY22. Now, in terms of the fixed dose formulation segment, which is around 16% of their revenue, that declined on a year-on-year basis, but did see a sequential recovery. The other two segments, which is API as well as the CDMO synthesis business, both grew on a year-on-year basis, but there was some amount of sluggishness on a Q-on-Q basis. Now, in terms of FY23, the guidance is that the company will report a double-digit revenue growth. They've already done around 33% for the 9 months of FY23 and stable margins. But remember that in the previous quarter, they did mention that the margins could be around 30-odd%. This time, the margins for 9 months have come in at around 28-odd%. So the street will watch whether or not there is any kind of improvement in the coming quarter. Remember, stock is already corrected significantly. It's down over 40-odd% from its 52-week high.
Okay, thanks for that, Ekta. Well, on that note, though, we'll wrap up on this edition of Markets Today. Thanks so much for watching.